Welcome to the Loan Arranger radio show. My name is Bruce Woodburn, and I'm the Loan Arranger. This is a show where we talk about how to save money when buying real estate, selling real estate, maybe questions you might have regarding a purchase transaction that you may have had in the past, or a refinance, or a struggle that you've had. Maybe you have questions about title insurance or home inspections. Could be any number of things. But when it comes right down to it, my expertise is down and dirty when it comes to getting loans approved and making sure that customers have a great experience. You know, you can go anywhere for a mortgage if you got good credit. Anybody will take you. I mean, who doesn't want a loan with 20% down and an 800 credit score and a debt ratio of 35%? Well, any lender can do that. But what you don't get is you don't get the level of service and commitment that you get from the Loan Arranger. I've been in the mortgage business for 33 years. I've closed well over 10,000 transactions. And that's not my company. That's just me. And I'm here to make sure that I take good care of you. A lot of you folks have listened to me. You've referred your friends and family and coworkers to me, and I want you to know how much I appreciate that. Now, if you've got a question or you'd like to reach me, the Loan Arranger, Bruce Woodburn, CrossCountry Mortgage, you can call me or text me at 407-706-3313. That's 407-706-3313. You can go to my website to apply online at WeBringYouHome.com. WeBringYouHome.com. Now, listen, it's a beautiful Sunday morning, okay? We might be getting a little rain today, but it's a beautiful Sunday. You're working around the house, okay? You're doing the yard. You're edging the yard. You're blowing the yard. You're vacuuming. You're doing the dishes. You're cleaning up. You're doing laundry. I know what you're doing. But I want you to stop for a second and just keep my number handy, because you may not need me right now, but you're going to have somebody or a friend or family member that might really need my help. And I want to be there to help you. I want you to know that you can count on me. So just call me at 407-706-3313 or go to my website at WeBringYouHome.com. But save me in there under the Loan Arranger. And also, you could do me a big favor. I'm trying to get my Google rankings up right now. So one of the things that I can do is increase my YouTube subscribers. So YouTube, when you subscribe to somebody at YouTube, you don't get spam or anything. You just know if they posted a video or some type of a blog. So, you know, I record this show and the show I do with Cleve on Saturdays, and it goes on my YouTube page. So if you go to Bruce Woodburn, the Loan Arranger, and it's not the Lone Ranger, guys, it's the Loan Arranger. I arrange loans. So Bruce Woodburn, the Loan Arranger, YouTube, and subscribe to me. I'd be so much appreciative. It's going to help me get up much further in the rankings, and that'll allow me to help more people throughout the country. Because as you know, I'm a direct lender and I lend in all 50 states. I'm doing loans in Oklahoma, Georgia, North Carolina, South Carolina, all of Virginia, all over the place. So you might need me in another state. You might have a friend you want to refer me to, or refer to me, and I want to be there to help. So keep that number handy. Again, 407-706-3313 or WeBringYouHome.com. Let's get down to business on what's going on in the economic state of the mortgage industry. My God, every day I come into the office, it's like, oh my God, what's going to happen with rates today? So, you know, it's funny. I was reading an article on what's going on with interest rates and what other people's and economists' predictions are going to be. So it's pretty doggone fascinating. And I was, everybody's freaking out. They're like, oh my God, rates are in the high fours and now they're hitting the fives and they're hitting the sixes. I'm freaking out. So I pulled up this article that really it was talking about tracking mortgage rates from the 70s to now. Okay, so let's just put this in perspective. Okay, so I was born in 1959. I'm 62 years old. I'll be 63 years old this year. But a lot of you folks maybe listening to the show were around in the 70s. Okay, so it's really interesting. So this article talks about as mortgage rates rise, and 40 years ago, And so let's just look at it. Half a century ago, when the American endured an economic earthquake. So it's talking about the import-dependent United States being rationing gas. Remember when gas was rationed? I mean, I remember that. I mean, it was kind of crazy. So you could only get so much gas, and there was lineups at gas stations and so forth and so on. You may remember that. And then oil prices jumped by 350%. And there was mass layoffs, prices were rising, head-on collisions between soaring inflation and economic stagnation. It was absolutely crazy. According to the Federal Reserve, oil prices doubled between 1979 and 1980. Doubled. You think we're seeing some problems right now? We got room to go. We could get a lot worse, and I believe it will. So let's just kind of recap the storms of the 70s. And the 30-year fixed rate in the 70s was about 7.33 for a good part of the time. Now, although when things started to stabilize, rates stayed at or just below 9% through the middle of the decade, but they breached double digits again in the fall of 1978, and then they remained there to 1986. But in the 1980s was the peak. In March of this year, the world learned that inflation had risen by 7.9% the month before, which was a 40-year high. Prices hadn't jumped so sharply since 1982. And while today's inflation is certainly causing anxiety, it is simply not comparable to the extraordinary events of 40 years ago. Because in 1980, started with the recession. And I'm going to tell you something, it was a recession. In the wake of Iran, there was the Iran crisis, mortgage rates soared to 16.35%. in April of 1980, plunging briefly, and I say plunging briefly, to a low of 12.18% in July. Then the devastating recession in 1981-1982 gripped the country. Mortgage rates peaked at on October 16th of 1981 at an impossibly high of 18.53%, 4 times today's rate. 1 year later, October 1992, inflation had finally fallen to a merciful 15%. In 1983, mortgage rates dropped again to 13. Though they briefly breached 14 in 1984, they never again hit 15%. On April 4th of 1986, mortgage rates briefly returned to a single digit. Oh my, I remember the single digits. In 1987, the stock market crashed and interest rates rose yet again. Mortgage rates never fell below 9% during the entire 1980s. And the 1990s began. The great cooling off. It was incredible. In fact, despite a brief spike at the tail end of 1994, rates stayed below 9% for the entire decade through the 90s. And then, of course, the 21st century came. Cheap money. In response to the pandemic, rates fell to a historic low below 3%. Borrowers became spoiled with the cheap money that today's based on that rate. And now today's rate of an average of about 4.75%, which was really last week at a high. And some people, looking at that history, think that that's a high rate. So I look at that and I go, oh my God, you think 4.75 is a high rate? Try 18.53. Could we get that high? Could. Do I think we will? Nope. Where does the Loan Arranger think we're going to go? I will tell you, but you got to write down my phone number first, 407-706-3313. That's 407-706-3313. Call me, text me your story. I'd love to hear from you. Apply online at webringyouhome.com. Why? Because rates are 4.75% to 5.5% right now. Why? Because rates are going to hit 6.5% to 7.5% probably in the very short future. And we come back from our next break, I'm going to talk about what the Fed's doing, what rates are looking to do. We actually this week we saw some bad days and some good days, where in the past 2-3 weeks it's been every day was a worse day than the day before. So look at you. We can sit and we can whine and cry about what today's rates are doing. Forget about it. You got some good news. And the good news is, as long as houses keep appreciating in value, I don't care if the rate is 10% or 9% or 8% or 14%. I don't care. It doesn't make that much of a difference, provided you qualify. The problem is a lot of you won't qualify. Like I can remember back in the 80s and 90s, if I had a client that was hitting 45% debt ratio, there was a stopping point. You couldn't go any higher than that. Heck, FHA and VA will sometimes do 55, 60% debt ratio, and people think they really can do it. Well, the good news is your house is going up in price, and as long as you can make your payment, as long as we're not losing jobs, we're going to be fine. Let me just grab a sip of water there because my throat gets dry while we're on the air here and with the continuous talking. So what are you experiencing right now? What are you feeling? You feeling that rates are getting out of control for you? So let's just put this all in perspective, because when I come back, not the next break, but the break after that, I want you to stay close. Don't lose the station. Don't turn me off, because I got some real important economic news that's going to impact you. And it's going to impact you in one way or another. So let's just say, I don't care, Bruce. I got a 2.75% interest rate on my house. I'm not planning on refinancing, and I'm not planning on buying. Right now, I'm sitting pretty good. My kids are off. I got one in college. One just got a new job. I'm this, I'm that. I'm a grandparent. I got grandchildren. They're all adults. Well, let me tell you something. When we come back, we're going to talk about rents. Now, we've been telling you that the national average for rents is going up by 20%. Okay, 20%. But I got some news here that is not correct news. It's not correct. But I'm going to tell you something. It's going to get worse than that. Much, much worse. So I want you to be aware of it. Because if you've got children or grandchildren that are currently renting and their rents do go up by 20% and you're paying $2,500 for a 2-bedroom, I'm going to tell you who's going to be moving back in with you. And if you don't mind the grandkids or the kids moving back in with you, and don't say they ain't ever moving in with me, when you start seeing your grandchildren or your children homeless, you're going to start letting them move in. So can this affect you? It affects the extended family. Don't think it doesn't. Just like a teenage pregnancy in a household affects the family. You got to look out for your kid, and then your kid's kid. It affects the family. It chews into your retirement. It chews into the time you wanted to spend in Europe and go away for a month and a half. And you can't do it because you're taking care of kids again. Don't think that your extended family does not affect you. It affects you, and affects you right in a pocketbook and right in your savings for retirement. So if rents continue to go up, you're going to expect to see that some of these folks are going to be moving back in with mom and dad and grandma and grandpa. And you got 3 kids and a dog and a cat, and one person not working and the other person working. It's going to get to be a traumatic experience at the household. I know it would at mine. So I'm moving into a 1-bedroom apartment, buying a condo, 1-bedroom, so nobody can ever move in with me. That's my retirement plan. Right now, my house is way too big, and I can bring too many people into that household. It's not looking good, folks. However, I think that if we teach our children well and really just teach on work ethics, good credit, paying our bills, working hard, then most of the time we're going to come out of this thing on top. If you have any questions, feel free to give the Loan Arranger a call. I'm at 407-706-3313 or webringyouhome.com. That's webringyouhome.com. I'll be back in 5 minutes with more of the Loan Arranger Show. Stay tuned. Well, welcome back to the Loan Arranger radio show. My name is Bruce Woodburn on WDBO Ask the Experts. You can also tune into my show on Saturdays with Cleve Loveland on the Loveland Report and the Loan Arranger radio show. But I want to thank you for tuning in today on this wonderful Sunday. You could be out doing anything you want right now. Anything you want. You got my permission. You want to mow the yard? Go mow the yard. You want to vacuum the house? Go vacuum the house. You want to take the garbage out? That's what I'm doing. Okay, cleaning the workshop. All right. However, it's a beautiful Easter Sunday. Okay. And I want to thank you for tuning in today. Matter of fact, we're going to be having some dinner with the family today and enjoying some time with the kids and the grand folks. So celebrating Easter. So I hope you celebrate a wonderful Easter as well. All right, let's get down to business. So we talked a little bit about if you already own your home, you've already refinanced, you don't have anything to worry about when it comes to mortgages. Why would I tune into this baboon that's talking on the radio about mortgages? Well, here's why. Because you're going to know somebody, if you don't already, that's renting. A child, a grandchild, somebody that you know. Now, it's interesting because I was reading this article, and it was written by Trevor Fraser of the Orlando Sentinel, and it said engineer Max Swanson was working in the home office at his Baldwin Park apartment a few days ago when his wife, Caitlin, came in crying. She was hard sobbing. Couldn't catch her breath, Swanson said. I asked, did someone die? It wasn't that. Instead, Swanson had received a renewal notice from her landlord. The monthly rent on their 2-bedroom was going up by $703 from $1,747 to $2,450, a 40% increase. Hey, listen, we're essentially facing a financial eviction right now if you're renting. And let's face it, renting is an adjustable rate. It's an adjustable rate. People call me, I don't want no adjustable rate. I want a fixed rate. Of course you want a fixed rate. Well, when you're renting, it's an adjustable rate. It's only going one place, too. Adjustable rates at least go up and then go down. Rents just keep going up. They keep going up, just like houses. The price keep going up. So you have to do everything in your power to become a homeowner. So listen to me, please. Listen to me if you're a parent or grandparent with adult children or adult grandchildren. If their rent goes up by 20 to 40%, which it's going to, and they don't own a home, guess where they're going to be moving? Because rent's going to be unaffordable. They will not be able to rent. They won't be able to rent. You're not going to be able to sustain that rent with the income. Right now, incomes aren't going up 40%. Interest rates have doubled in interest rate. Housing prices in the last year have gone up 20%. In the last 3 years, they've gone up almost 60%. Has your income gone up 60%? Don't tell me the inflation rate is 7% or 7.5%. That's what the government keeps telling you. Jen Psaki, the inflation rate at 7%, that's insane. How can it be at 7%? Well, I'll tell you why. Because it's a trick. It's a skewed number. When they give you an inflation rate, they exclude fuel, groceries, and housing. Well, can you just avoid paying your fuel, grocery, and housing and everything would be fine for you? No. So if you factor in fuel, groceries, and housing, we're probably at about a 35 or 40% inflation rate. But they don't want to tell you that because we'd go into a panic. Because your income's not going up fast enough. There's no way. It's not going to do it. Stay tuned. I got more information on how we can solve that problem. But first of all, you've got to save my number in your phone at 407-706-3313 or webringyouhome.com. I'll be back in 5 minutes with more of the Loan Arranger radio show. Bruce Woodburn. Welcome back to the Loan Arranger radio show. My name is Bruce Woodburn. I'm a mortgage lender right here in Central Florida. They call me the Loan Arranger. Why do they call me the Loan Arranger? I'm arranging loans for you, your family, your friends, your kids. Why choose me over somebody else? People say that to me all the time. Why would I choose you over another lender? Well, I'm going to tell you the truth about that. First of all, interest rates throughout the country for one lender versus another are pretty close to the same. Why are they the same? Because we're all getting our product from the same place. They're all mortgage-backed securities. So why would one company appear to have a lower rate than another? Probably because their fees are higher. Why would one company have lower fees than another? Probably because their rates are higher. At the end of the day, it balances out. So why choose your bank? Because your bank stinks. Your bank is not your friendly friend, your neighborhood friend. It's interesting. I was driving through Tampa the other day, and we were downtown Tampa, much bigger city than Orlando, and every one of the high rises are banks. They're just flush with money. They're not flush with money because they're your neighborhood friend. They're flush with money because I think banks, quite frankly, just suck off the system, but we have to have them. We have to have them to exchange money. So don't think that your bank is your neighborhood friend. Why would you choose me over a bank? I have more loan products. All I do are mortgages. I don't do car loans. I don't do boat loans. I don't do business loans. I do home loans. That's all I do. I'm an expert at home loans. My team are experts. It's interesting. We were having a meeting the other day with my team, and these are not my loan officers throughout my branches. This is just my loan officers that help me help you. That's it. I have I got 5 of them on my team, and they grind through to make sure that I get your loan approved and we get you the best rate possible. But they were saying, because we get loans in from other companies that a realtor call me and go, you got to save this deal. Or a client will call me and go, I went to my bank or my credit union, or I went to the rocket ship or whatever, and it just blew up. Okay. Can you save it? And it's a 50-50 because 50% of them were never really a loan to begin with. They weren't a qualified client. The other 50% are absolutely doable. The loan officer or the lender did not know how to structure the loan properly, doesn't know guidelines, doesn't know how to put a deal together. It's funny because, you hear Cleve, if you listen to my Saturday show, he's like, man, I just hate it when somebody goes outside of Bruce, because he knows what you get with me. He knows that if I tell you that deal's not going to fly, it's not going to fly. If I tell you the deal's going to fly, we're going to the closing table. And the only other answer you get is, I don't know yet. Why don't I know yet? Because there may be a significant piece of the puzzle missing that you haven't provided me with. Your tax returns, your W-2s, your pay stubs, your divorce decree, big one. You lied on the application. I had a client, I got to tell you something. I had a client I closed this week. Closed 2 properties for him, one in Tennessee, one here. And he may be listening to the show, but I don't really care because I'm not going to mention his name. But here's a guy that I pre-approved to buy a home. He was selling a home here, and it was contingent upon him selling the home here. So I got him approved. One of Cleve's people went out and helped him find a house. This guy, then after I've got him approved for my mortgage, sends me a contract to buy a house in Tennessee. Well, that Tennessee property had to close simultaneous with my property. So do you think that complicated the situation? But he never told the realtor, okay? And he didn't tell me till after the fact, so I had to readjust all of our numbers, okay? So that's all going fine. Then the house that he needed to sell here was a rental property, and the tenants refused to move out, so that deal fell apart, okay? That deal fell apart. So now I got a Tennessee property. The Tennessee over in Tennessee, they're struggling with appraisals. Took me 3 weeks to get an appraisal in for Tennessee. Nobody wanted it. They kept rejecting it. So Now, his tenant's fallen. His tenants caused him not to be able to sell the house he wanted to sell. He's now in contract to buy 2 houses. One's affecting the other one. It's a domino effect. I'm getting ready. I found a way that I could sneak this thing through and get both these loans closed. Then at the 9th hour, I find out the guy's in contract to build a home with a builder for $1.3 million. Do you think those numbers might have thrown the deal out a little bit? So I'm like, oh my God, every time I fix this guy's problem, he comes up with a new one for me. So you know what? I'm going to tell you something. On Tuesday, I closed both my transactions. Closed them both. I figured out a way to make it happen. Now, that doesn't mean I can untangle the web for everybody. That doesn't mean I can fix all your junk. And what it does not mean is you never withhold information from me, because I'm going to tell you something. This guy had 60 grand on the line he was getting ready to lose. If I wouldn't have closed those deals for him, he'd have lost it. And it would have been his own darn fault for not being forthright with me, not letting me know the cards that I had to play with. He was hiding cards. He was sandbagging from me. Don't do that. Come to me. I'm here to save the day. I'm the loan arranger. I'm telling you, I will do what I can to wrangle that deal so that we get to a closing table smoothly and on time. Now, that's one of the reasons to use me. I have construction perm loans for FHA, VA, conventional. I have rehab loans. You want to buy a house? Can't find the house you want? Pick the little dumpster down the road and let's do a rehab on it. I got rehab loans, FHA, conventional. I got them all. Okay. I've got first-time homebuyer program. I've got move-up programs. I've got literally and my jumbo loans. Jumbo loans, incredible. Better than a bank. Way better. You want to put 20% down? I'll do $2 million loan. No problem. Now, you want to put 3.5% down on a jumbo loan? I got it. 3.5% up to $1.5 million, no PMI. You want to put 5% down to $1.75 million? I got it. No PMI. I got it. I got programs nobody can touch. Why? Because I'm in all 50 states. I'm a powerful lender. I got great buying power, and our credit is through the roof. So that's why I can coordinate great programs and pass those on to you with great deals. But here's what else you get. And this is really the sweet spot for me. You get a return phone call. You get me calling you back. You get me watching your loan as it goes through my little system, as it goes through the channels. Okay, it goes from my origination team to my processing team to the underwriting team to the closing team, just like an old Model T going through the assembly line. Clunkety, clunkety, clunk. But you want to know something? That allows me to get multiple departments working on a loan at the same time. So while my loan officer's pre-qualifying you, my processor's verifying your income, they get all those things together. It's going to my underwriting department while my closers are getting your homeowner's insurance and your payoffs. I mean, it's a beautiful system. It's a beautiful system. You want a lender that's going to take care of you. You want a lender that's going to be truthful. Okay? Any of you that have called me before, you know I'm a no-nonsense guy. I'm a no-nonsense person. I want you, let's get to the point, let's get the facts done, and let me get your loan closed for you. But I believe in honesty. I'll be honest with you, you be honest with me. We run into a lot less problems like that. It's kind of funny that way. You want somebody that you can count on, then you call 407-706-3313. That's 407-706-3313. Go to WeBringYouHome.com. I am the host of 2 radio shows broadcasting throughout Central Florida. I am the host of my YouTube channel. It's viewed through other planets across the galaxy. I am the host of my Spotify podcast, my iHeartRadio podcast. You can catch me anywhere. I'm omnipresent. It's crazy. I want to be here for you so you know how to reach me. But guess what? You get a return phone call from me. So I'm on the air. It's Easter Sunday. Okay, I'm not going to call you back today. My family needs me too, but you're going to get a call from me Monday. By the way, when I call you back, can you do me a favor and actually return the phone call? Some of you call me, and then I call you Monday, Tuesday, Wednesday. You finally call me by Wednesday. What's that all about? I'm calling you as soon as I get into work on Monday, and you're waiting to Wednesday to call me and tell me you're busy. You're not busier than I am. I guarantee you that. I guarantee you that. I work 12-hour a day, 13-hour a day during the week, and that's what. Then I come in on Saturday, and I do the radio show with Cleve. Then I come in on Sunday, and I do the radio show for me. So you're not busier than me. I know you're not. Let me help you. Stop being too busy to save money. Pick up the phone and give me a call. You hadn't refinanced yet. You need to consolidate debt. Would you please stop? Stop waiting for the rates to hit the 6s and 7s. They already are for investment properties. It's going to be there for owner occupied. Call me today while rates are still attractive. 407-706-3313. Now, let's get back and talking a little bit about our little rental friends, okay? So you hear me say there's no such thing as a rich renter. It's getting ready to get unricher even faster. It's crazy. So median asking rent in Orlando right now, as of March, $22.95 a month, okay? That's a 57% increase, okay? Tampa, up 56%, all right? Arizona is the top. Guess what Arizona came in at? You know what their rent increase is? And listen, we're a lot like Arizona. Don't think we're not. 139% rent increase, the top in the country, 139%. That's doubled in a half. So if you don't want your family to move back in with you, help them out with a gift. Help them out with a down payment. You're going to leave them money when you're dead anyway. They're just going to go buy a big screen TV and a Boston Whaler, a jet ski, and a Harley Davidson with your hard-earned money that you never got. So why not ensure that the money that you give them for inheritance goes toward housing? By the way, I'm just going to tell you this. In my will and trust for my children, the money has to go to houses. Why? Why don't I just give them money to spend any way they want? Because they'll spend it any way they want. Now, my kids are learning. They're seeing Dad, and they're seeing what I preach. But if you have to buy a home with it, and homes always go up in value, but a Boston Whaler goes down in value, a TV goes down in value fast, and they only last for 2-3 years, why would I want you to invest in anything else? I can help you get rich. When I say rich, I mean rich. I mean you can really become wealthy with buying property. Follow my Leapfrog program. Get enrolled in my class. Go to my website at webringyouhome.com and register for my next housing class. I will help you. No charge. Listen, I think I should be charging $1,500 for this class. I really do. It's a $1,500 class all day long. And you should even pay me royalties on the amount of money that you make on your real estate. I never seem to get those checks, though. But I've got my own checks. I will show you how to buy 5 properties. By the time you retire, they'll be worth $3 million to $5 million. It will be paying you $20,000 to $30,000 a month in rental income, and they're all going to be paid off. How would you like that? How would you like that? Now, you just have to listen to me and stop getting out of the lane, okay? When I say no condos, no 1 bedrooms, no 2 bedrooms, 3 2s and up only, okay? Single families, good schools. That's what I want. I don't care that it costs more. I care that it makes more. That's what I'm looking for. And you got good tenants. I'll show you how to do that as well in my home buying program. Just enroll in my class. It's easy. Go to webringyouhome.com. Call me. Excuse me, I had to take a swig there. It is only water, trust me. Call me at 407-706-3313 or go to my website at webringyouhome.com. If you haven't refinanced yet, apply right now. Just go to my website and apply right now at webringyouhome.com. If you are a renter, I swear you're going to pay a serious price for your rent. It's going to happen. It's going to double in price in the next couple of years. Don't be foolish. Buy now. If you can't afford to buy right now, then let's get on a path to buy right now, because I can read your tea leaves for you. You are either going to move back in with mom and dad or you're going to buy a house. But don't delay any longer. Do it now. Rates are continuing to go up. I'll be back in 5 minutes with more of the Loan Arranger radio show, where I'm yelling at you about buying a house right now. It's okay. Somebody's got to do it. Welcome back to the last segment of the Loan Arranger radio show. I truly appreciate you and your, I pray for you that you enjoy your beautiful Easter Sunday or Passover, depending on what you are. As you know, I'm a Christian and my wife is a Jew. At least she's half Jew. So we celebrate a little bit of everything in our family. And so I hope that you enjoy your weekend with your family, celebrate, and just enjoy some maybe Easter egg hunting or something of that nature. But I appreciate you tuning into my radio show. I really do. So I want to just wrap this last segment up so that we can put everything in perspective. We talked about on October the 16th of 1981, interest rates were 18.53%. 18.53% in October of 1981. Right now, they're 4 3/4. Some are 5 1/4, depending on credit scores. Okay, investor loans are already in the 6s. Okay, and in the 6s with points. By the way, I'm predicting that owner occupied are going to be in the 6s soon. The Fed's pressuring the government to raise the Fed rate. Okay, or the government's pressuring the Feds to raise the Fed rate. They're going to do it. It's going to happen. Okay, they've already done it over in the European Central Bank. Everything's getting raised. They're going to do it to slow inflation because they're telling you inflation's 8.5. It's really probably about 30. Okay, look at your price of gas is 50%, 100% higher than it was, almost. Food 25%. I mean, everything. It's going up. But don't look at the bad. Don't look at the glass half full. Look at the glass. I can't even talk. Don't look at the glass half empty. Look at it half full. So why? Because houses in this area, the median housing price is being $368, are predicted to go to $640. So I want to buy all the houses I can get for $368 because I'm going to double my money by 2025 or 2026. They're going to be $650. So if I can buy 10 houses, then I'll make $3 million just by buying 10 houses. I'll double my price. Wouldn't you like to do that? You can do it too. Let me show you how to get into the Leapfrog program. Go to my website at webringyouhome.com. Now, if you're renting, rents are predicted to go up 20%. In some cases, they're going up 47%. 47%.
Come on, man.
That's right. Come on, man is right. You know,
Come on,
man is who did it. Okay. And if you don't want to get caught up in that, then stop living in an adjustable rate and get into a fixed rate. You're renting, it's an adjustable rate. I can help you. Go to webringyouhome.com. Please go to webringyouhome.com. Please call me at 407-706-3313. I want to help you. Stop the bleeding. You keep renting, it's just going to keep going up. Then you're going to be moving back in with grandma and grandpa. I'm going to tell you something. They're getting too old to handle you. We put you on a game plan. Okay? Listen to me. I'll help you fix your credit. Listen to me. I'll help you save money. Stop spending. Stop spending money. Save money. A financial planner told me one time, Bruce, you either fix your financial position or your retirement's going to fix it for you. Because when you hit 65 and you can't work anymore and you don't have the income, but you still have the debt and all you're going to live off is Social Security, you hope, you're in big trouble. Big trouble. And that is the worst way to go into retirement. Why don't you go into retirement rich? I can show you how to do it. Listen, I'm a 10th grade dropout. I'm not the smartest guy you'll ever meet, but I know how to figure out money. I know how to make money, and I know how to help you make money. So stop being foolish. Stop renting. Fix your bad habits. Let's fix your credit. I have all the programs to help you. If you know somebody that falls into that category, good Lord, send them to me. Okay, I'll yell at them for a little while. I'll get them fixed up. I'll straighten out your kids, your grandkids. I can do it. At least I'll try. I will be back next week, same time, same place, or Saturday. Just see me at webringyouhome.com. Listen to me on this radio show. Call me, 407-706-3313. Please write that number down, 407-706-3313. And God bless America. Happy Easter to all you. I love you, and I'm always there for you. I promise. Have a great weekend.